สวัสดีค่ะ Good morning, distinguished guests, ladies and gentlemen. How are you doing? My name is Hani Cholapansa Narula. Very honored to be here as your host, and a big welcome to the opening of DS Summit 2019 Thailand. I hope you all are having a wonderful time. In a time when security tokens is the buzzword and blockchain technology is a hot topic amongst business executives and investors around the world. So we bring you this very first conference dedicated to digital securities in Thailand. So DS Summit 2019 features exceptional speakers and panelists coming from many countries around the world, and they'll be bringing you unique perspectives to the opportunities and challenges confronting the future of digital securities. We're very delighted to be joined by blockchain industry leaders. We have regulators, policy makers, business executives, tech innovators, and also investors coming from around the world joining us here this morning. And DS Summit 2019 Thailand is brought to you by our main sponsors, Elevated Returns, Seamico, Tezos, and Alphapoint, in association with our secondary sponsors, Securitize, Chain Fund, and Tezos Southeast Asia. So special thanks to our kind sponsors, so the contributors, for helping make this event possible. So now to begin, ladies and gentlemen, I'd like to take this opportunity to warmly invite Mr. Suthep Wongwaraset, Chairman of Seamico Securities Public Company Limited, to deliver the opening speech. How about a big round of applause, please, welcoming Kun Suthep Wongwaraset.
Good morning, ladies and gentlemen. First of all, on behalf of our sponsors, I would like to extend my warmest welcome to all of you to DS Summit 2019 Thailand, the first dedicated conference on digital securities in Thailand. The world of banking and finance industry, as we know for many years, is in a fundamental transformation process, triggered by fintech, and most importantly, the blockchain technology. We have seen the rise of ICO using blockchain technology as a new capital financing breakthrough, raising billions of dollars across the world the last 2 years. And with special thanks to the Ministry of Finance and Security Exchange Commission, Thailand is one of the first countries to issue digital assets and ICO regulation to facilitate towards investment in digital assets and foster Thailand's digital asset ecosystem. The most recent concept of STO, or asset tokenization, is gaining more attention globally. I'm very excited by the revolutionary nature and the benefits that digital securities will bring to traditional financial assets and capital raising process. The recent launch of the token sale by the St. Regis Aspen Resort, a transaction in the US that was spearheaded by our strategic partner, Elevated Returns, is a great success case study and a real inspiration for what tokenization can bring and unleash the financial assets. The number of financial assets that can be tokenized is indeed expansive. At the same time, we have seen a very good response from the market, and investors are very excited on this new innovative investment option. We truly believe that the opportunity for market for us in the future is tremendous. This conference is only the beginning of many more initiatives to come, as Elevated Returns and Seamico Securities look to promote and bring awareness to the Thai market, the mechanism and benefit of tokenization and digital securities. Similar to the recent disruptive innovation in the banking and financial industry, securities digital security will eventually rise and will become more popular and grow rapidly in the Thai market, as we have seen in other countries. Today is a great opportunity for us all to hear from more than 15 leaders, speakers, and panelists, and to meet and network with more than 200 other financial professionals across different industries. It is an opportunity to learn and share and immerse in the disruptive innovation that asset tokenization and digital securities will bring. We are also very honored today to have the leader in the security token issuance, elevated returns, Tezos, our partner, the leader in protocol, as well as other great sponsors, to share and impart their knowledge and experience with us in this conference. Lastly, I would like to thank you all for joining us today, and I hope that you find this conference both educational and enjoyable. On that note, let us all welcome DS Summit 2019 Thailand. Thank you very much.
Thank you very much, Khun Suthep Wongwaraseth, Chairman of Seamico Securities Public Company Limited. Thank you very much for the opening speech. Ladies and gentlemen, now let's move on to the very first keynote presentation of today at DS Summit 2019 Thailand, which, of course, will take a look at the current state and the future of digital securities globally. It's my great pleasure to invite the keynote speaker to the stage. This is a person who has been absolutely playing an amazing instrumental role in putting the event together. He's from Elevated Returns, a New York-based financial group that focuses on digitizing financial assets. Please put your hands together to warmly welcome Mr. Stefan Debates, founder and president of Elevated Returns. A big hand, please.
ขอบคุณครับ สวัสดีครับ Thank you, Khun Suthep. Thank you, everyone, for being here. You know, I've spent 22 years of my life in Thailand. So first of all, it's good to be back. And I'm going to start this keynote by remembering what the dean of my university said when we got graduated with all my friends at the time. He said, whenever you leave a place, make sure you leave in good terms, because you never know what life's going to throw at you, and maybe one day you'll be back. Now, listen to this. 20 years ago, I was working in the finance industry in Thailand in a company called Seamico Securities. And guess what? Last Friday, we bought 346 million shares of Seamico Securities at 135 baht per share, giving us 21% of the company. So I guess the dean was right, and we are so happy, super excited to be partnering with Khun Suthep and his team. Thank you. So who are we? We are based in New York. We are a company that are active in financial product. We buy real estate. We buy trophy asset. And for the last 2 years, we really thought and say, how can we actually change a little bit the world? And how do we give liquidity into this giant asset class, which is real estate, and allow normal people to also own a piece of the dream? So we started being the first company in the world that had a single asset hospitality REIT qualified by the US SEC, and we tried to do an IPO. But we found out it was expensive, lengthy, too many intermediaries. The lawyers were making a lot more money than we were making, and we say, there has to be a better way to do this. So at the same time, there was this giant wave of interest into cryptocurrencies and ICO, and we say, why don't we listen to what the market is telling us? Why don't we take advantage of technology, but create an instrument which is effectively backed by a real asset? And that's what we did. We took 20% of the Synergies Aspen, it's a beautiful picture, And we created a security token that gives investor a direct interest into the property. It pays dividend, is real estate back, and I think is one of the first security token offering that took place in the world. So by doing this, we learn a lot of things. We learn what is already existing and why it works, but we also learn what is truly needed for this security token industry to flourish. So first of all, what we need is you need to be in a pro-business environment. That's number one. You need to have a progressive regulator. You need to have a market that embraces innovation and technology. And you need to have a heavy retail participation in the market, because truly this disruption is about cutting the middleman. So it's connecting the investor with the product. So let's think about this. Pro-business market environment, progressive regulator, market embracing innovation, heavy retail participation, that's Thailand. So at that time, when we learned all of this, I took my mobile phone and I called Kun Sutep and Kun Chaipat and said, can we do something together here? Because this transformation is happening anyway. And Thailand has all the elements necessary to make it a true success. So that's how we got involved. And Seamico directly created a 100% owned subsidiary, SE Digital, to lead that revolution. So what will we offer into an ecosystem? For an ecosystem to work, you need to have different elements. So of course, you need to be able to issue token. That's a portal license under the SEC regulatory framework, and Seamico is currently looking at getting this license being issued. You need an exchange, because those tokens, once issued, they need to trade somewhere. That's a partnership that Elevated Return has established with Alphapoint, the leader in private exchange, and we will get also an application for security token exchange. And then you need asset management, because a lot of the institutions don't want to go straight into a new asset class. So they like to have an intermediary to actually manage the process for them. Seamico owns a subsidiary called Innotech that will be playing that role, being the leader in launching crypto asset management and unit trust. So Kun Sutep talked about an ecosystem. I try to show what an ecosystem looks like. That's Thailand Digital Securities. We've done a partnership with Tezos and using their blockchain protocol. Now, some of you knows Bitcoin, Ethereum, Ripple, and they say, why did you choose Tezos? It's a good question. And I guess the analogy is, if you're going to go and let's say you're racing car, and your race is going to be in the desert, you could choose many, many cars, but you're going to choose a car that is probably very durable, that allows you, heavy-duty shocks and absorption. You're basically going to choose a car which is purpose-built for what you want to achieve. Blockchain protocol is the same. There are blockchain protocols which are very good for fast transaction, and there are blockchain protocols which are extremely good for smart contract security and administration. That's what Tezos is. So as you can see, you have asset management, portal issuance, and secondary. What is super interesting as well, this is not all about elevated return. It's about an ecosystem. All of you, my dream is, all of you at the end of today should go back home and say, how can I take part of this ecosystem? What can I bring to it? How can I utilize it? Because it's a new asset class. It's not about elevated returns, Seamico. We're just the pioneer. Every one of us should be learning to interact together. So we say the digital assets are leading the blockchain revolution. there's a lot of different parts in the blockchain revolution. First of all, everybody knows Bitcoin. But Bitcoin is a cryptocurrency, which means it's an instrument that could be or could not be a store of value. We can have that argument later with a couple of glass of beers. But it's basically just an instrument to facilitate exchange. Then you had what we call the grave coins. On the first wave of ICO, there was many people that launched the promise of a future service. Unfortunately, 90% of those services will never exist, so we call them the grave coins. And then you have the digital securities, which are effectively, we're not reinventing anything here. We're just taking what existed before, but we make it faster, better, and cheaper. So why financial products are changing to digital assets? And that's a very important part of the presentation, because when we were marketing the Aspen coin, a lot of people told me, Stefan, you're not inventing anything. What you're selling is a share in a REIT. And I said, that's right. That's what I'm doing. But guess what? That was the first car. We're still driving cars today, but they don't look like this. That's what was a share certificate look when stock market was first invented. And guess what? A few years later, that's what a car looked like. And what happened is there was a clearinghouse. Suddenly you can get your money on T+3. That's what a car is today. It's faster, cheaper, more efficient, and that's what blockchain is going to do to financial assets. So for the people saying, it was already there, it's true. We're just going to take the same financial product, maybe create new ones, but we're going to make them better. I'm going to make a prediction right now. In 5 years, there's not going to be any IPO or financial product formation that will not take place in a digital form. I'm not talking about 50 years, I'm talking 5 years from now. So the main advantage of digital securities is truly, it's a global product, because here it's how it works. Today, a securities exists on an exchange. It complies with the rule of the country and the rule of the exchange. A digital securities is administrated by a smart contract. So effectively, the contract becomes the regulator. If you're not supposed to buy the security, the contract's going to say, transaction not allowed. And what you can do in a smart contract, you can build several layers of compliance. So your contract could be compliant with the laws of Thailand, US, Europe at the same time, which means you can actually trade stocks and securities 24/7. It becomes a global product. So like I said, the smart contract is really the technology that actually is powering those digital securities. But because it's global, nobody wanted all the information to be stored in one place. And this is why we're using decentralized ledger. Nobody owns the information anymore. It's owned by the network. It's secure. It's immutable. So some of the benefit of digital tokens you can read: increased liquidity, smarter securities. We can do a T0 settlement. You can use them peer-to-peer. I'm going to make another prediction now. Today, if I want to sell a securities because I want to buy a watch for my wife, what am I going to do? I'm going to call my broker. He's going to place an order. I'm going to wait 3 days to get the money into the broker's account. That's going to be transferred to the bank. Then I'm going to go and use the money from the bank to buy a watch for my wife. Why is that? Why do we need 5-step transaction? Why can't I take my phone, go to the watchmaker, and tap it, and exchange an asset for a product and service? So people have talked a lot about the crypto space, but look how tiny it is. It's 140 billion today. Amazon after the affair is 800 billion. Used to be the first trillion-dollar company. The total money in circulation is 86 trillion. Real estate is 212 trillion. Imagine if only a portion of real estate is being digitalized. You better go in very early. This is still very, very early stage. That's another powerful slide. I love it. Because the first line is really what people know about crypto. Bitcoin, Ethereum, EOS. I don't know how many of you knows the second line, but these are people semi-famous. The Winklevoss brothers that famously sued Mark Zuckerberg about the ownership of Facebook. You have Galaxy, which is Mike Novogratz, that used to run Goldman Sachs and then Fortress. But look at layer 3. We all know those companies. Is Fidelity, is Rothschild, is Mitsuo, is NASDAQ, is Goldman Sachs? It's already happening. And guess, Mr. Jamie Dimon, that was so against crypto, 3 weeks ago he said JP Morgan is launching the JP Morgan coin. That's a signal. We're not coming back from there. So we didn't Photoshop, by the way, this picture. It's really what the NASDAQ is putting on Times Square right now. So all the players are already moving in. Facebook headquarters has 20 open positions for blockchain specialists. So I'm making the third prediction today, is both WhatsApp and Facebook will have their own crypto token within 2 years. Look as well how we've changed. You would have come to a blockchain conference 5 years ago. People would have face tattooed. They would be smoking joints. This is McAfee that made very famous comment about where Bitcoin's going to go and what is he going to do if he's not going there. Nowadays, this is what blockchain conference look like. It's being institutionalized. So what are we going to do as elevated return and why? We're going to concentrate on 2 verticals of asset class that we think are 100% tailored to the appetite of the people here in Southeast Asia. Number 1, global real estate. It's 70 trillion. Here is the reason why I believe that all of you should own real estate tokens. If you take the value of money over 100 years, you're going to lose 98% of your value, what is called purchase parity. If you take any real estate in any major urban city over 100 years, you beat inflation plus 40%. So therefore the question is, why are we holding cash? Every minute that you hold cash, you actually lose money. It's called inflation. We are holding cash for 2 reasons. We're holding cash because A, we've been programmed to do so, and B, because it's liquid. But if you suddenly have global product that can be sold anywhere on multiple exchanges, that can be used in the point of sale to buy goods and service, maybe we don't need cash anymore. I'm going to ask a question here, because I've been talking a lot, I want a bit of interaction. Who think that Warren Buffett is a great investor? Raise your hand. All right. How many of you that raised their hand own a share of Berkshire Hathaway? None. Why is that? Well, let's go through the reasons. A, you need to have a brokerage account in the United States. B, 1 share of Berkshire Hathaway costs $300,000. So why is it that we talk about people, brands that we like, but we don't have access to it? We're in 2019. So what we're going to do, we're going to do this. We're going to take the big cap blue chip companies and we're going to tokenize them. We're going to give the opportunity for all of you not only to go to Starbucks and have a frappuccino, we're going to give Thai people the opportunity to own a fragmented interest into Starbucks, Amazon, Microsoft, any of those shares, because those are global companies. The ownership of those companies should be global too. There's no reason. So, two quotes from people that we all know, which I think are so significant, because truly what I'm trying to say here, we are not trying to use blockchain for taking something that doesn't make sense, and suddenly because blockchain comes, it will make sense and be economically viable tomorrow. We're just transforming an industry, and this is what Steve Jobs said to the ex-CEO of Coca-Cola when he gave him a job. He said, do you want to sell sugar water all your life, or do you want to come with me and change the world? Elon Musk said, I could either watch it happen or be part of it. I can tell you one thing. At Elevated Return and Seamico, we decided to be part of it. And not only that, we decided to lead the transformation. So, I don't know how many of you knows this person, but he's very important in the crypto community. His name is Brock Pierce. He used to be a child actor, was one of the first members of the Bitcoin Foundation. He's a billionaire. He has approximately 300 angel investors in his VC fund, and he gave a speech about leadership and transformation. So we're going to watch a little video, if you don't mind.
If you've learned a lot about leadership and making a movement, then let's watch a movement happen, start to finish, in under 3 minutes, and dissect some lessons. First, of course, a leader needs the guts to stand alone and look ridiculous. But what he's doing is so simple, it's almost instructional. This is key. You must be easy to follow. Now here comes the first follower with a crucial role. He publicly shows everyone else how to follow. Notice how the leader embraces him as an equal. So it's not about the leader anymore. It's about them, plural. Notice how he's calling to his friends to join in. So it takes guts to be a first follower. You stand out and you brave ridicule yourself. Being a first follower is an underappreciated form of leadership. The first follower transforms a lone nut into a leader. If the leader is the flint, the first follower is the spark that really makes the fire. Now here's the second follower. This is a turning point. It's proof the first has done well. Now it's not a lone nut and it's not two nuts. 3 is a crowd and a crowd is news. A movement must be public. Make sure outsiders see more than just the leader. Everyone needs to see the followers because new followers emulate followers, not the leader. Now here come 2 more people, then 3 more immediately. Now we've got momentum. This is the tipping point, and now we have a movement. As more people jump in, it's no longer risky. If they were on the fence before, there's no reason not to join in now. They won't stand out, they won't be ridiculed, and they will be part of the in crowd if they hurry. And over the next minute, you'll see the rest who prefer to stay part of the crowd, because eventually they'd be ridiculed for not joining. And ladies and gentlemen, that is how a movement is made. So let's recap what we've learned. If you are a version of the shirtless dancing guy, all alone, remember the importance of nurturing your first few followers as equals, making everything clearly about the movement, not you. Be public, be easy to follow. But the biggest lesson here, did you catch it? Leadership is over-glorified. Yes, it started with the shirtless guy, and he'll get all the credit, but you saw what really happened. It was the first follower that transformed a lone nut into a leader. There's no movement without the first follower. See, we're told that we all need to be leaders, but that would be really ineffective. The best way to make a movement, if you really care, is to courageously follow and show others how to follow. When you find a lone nut doing something great, have the guts to be the first person to stand up and join in.
Thank you. I think it was very powerful. I don't know if that makes me a lone nut, and I'm certainly not going to take off my shirt, but what we're saying here is truly the first step of what I think is going to be a global movement, a global revolution. And I have to be thankful to the regulatory framework and the government of Thailand, because I can tell you, from New York's pair of eyes, you are leading the revolution. So thank you.
Thank you very much to Mr. Stefan Debates, founder and president of Elevated Returns, for sharing with us, giving us the overview of digital securities and how it will revolutionize the financial services industry.
Is there any question? Are we doing a Q&A? Or?
Yes, if there are any questions, please. Any questions from the audience? President of Elevated Returns is actually here to clarify any issues that you might have when it comes to digital securities. Our staff will bring you the microphone.
How fast do you think, if, for example, if you have a real estate portfolio like buildings and high-end properties as a private identity, to offer it on your platform, and how can you offer it, and how fast do you think you'll be able to offer your own assets on your platform?
Okay, very good question. One thing we need to remember here is blockchain does not create magic. So at the end of the day, it's what is the quality of the underlying product? Like any new transformation into a new asset class, you need to make sure that the first few products are very attractive to investors. I call it the low-hanging fruit, and no disrespect for using that term. But we need to make sure that the first few offerings have to be great product, conservatively priced, so that people actually make money out of the new asset class. So it's super important to be hyper-selective on the portfolio to bring. But the process, to answer your question, if you answer your question about when are we going to be ready to offer digital securities in Thailand, we're probably looking at the end of Q2 or Q3. And the process of offering is actually a much faster process than a typical IPO. So you should be able to run the process from doing the initial due diligence to the offering within 90 to 120 days.
Any further questions? We have one from the gentleman. Okay, so both sides. We'll go with gentleman on the right, and then to you, sir.
Yeah, I actually have like two questions. One question is that it's a fantastic seminar today, so people will get educated. But isn't the problem that the general population, even the specialists, they don't quite understand the whole digital process? And what are the risks? Because you're saying, okay, I invest in real estate, I invest in securities, stocks and so on, I know. But what are the real risks here? Do people understand that well?
Okay, good questions. So to answer your first question, remember when we had the slides about what does it take to be successful, we had a market that embraced innovation. Let me give you two statistics about Thailand. 74% of the population have access to internet banking. It's #1 penetration in the world. Another statistic, 9.9% of the populations have crypto wallet. That is the second highest penetration in the world. So education needs to happen, and people need to understand differentiation between a cryptocurrency, a utility token, and investment token. But I think that what we've noticed here is that the people already ask for this transformation. I'll give you another statistic, Coinbase. I don't know how many of you have a Coinbase account, but Coinbase has 28.8 million active accounts. That is more than Fidelity or Ameritrade or E-Trade or Charles Schwab. So I think that the new generation wants a new product, and I like the approach of being regulated, because that puts the burden on the intermediary to do the homework. So what are the risks? Obviously, if you're going to buy a cryptocurrency, it's truly only worth what the next guy is going to want to pay for it, because you have nothing to backstop the value other than the value of the network itself. When we talk about securities token, if you buy an Amazon token, you effectively own a share of Amazon. You just own a fragmented part of it. So the argument is there is no risk. There's the same risk as owning Amazon to start with. So the biggest risk is really liquidity. Are those tokens going to be liquid? And that's something that the market's going to have to work. One thing we know about liquidity is the bigger the asset class, the bigger the liquidity. So I think that I have great expectation on liquidity in the retail market because people go in and out all the time. That creates volume transaction. But as long as we stick with security tokens, which are backed by real asset, I think the downside is somewhat mitigated.
And final question will be from the gentleman here who invested in Berkshire Hathaway, I believe.
I have a question. I understand that most of the asset class that you're going to be trade will be based on some sort of currency exchange. How would you explain, let's say that you have an asset class in America, but the purchase is made in Thailand, so obviously it's got to be pegged on something. How would your coin base pegged on, whether it's Thai to US currencies? Like how would that transform into the value that you're going to get per each of, let's say you have ICO on your assets? What's that going to be?
So that's a great question again, because we need to change the way our mind works. Today, as you know, securities exist in a country, so it has a certain currency associated with the security. But the same way Amazon had this slogan when they first started and say, anything, anywhere, anytime, I believe that the exchange of tomorrow will be product-centric, will be vertical. You're going to have an exchange, global exchange for real estate. You're going to have a global exchange for art, for wine, for derivative. People will go and access a marketplace based on the nature of the instrument rather than the location of the issuer. So to answer your question, people will change the way they think. We're going to have a giant matrix of barter, and you would want to know what's your asset value in dollar, but somebody else would want to benchmark against Ethereum. And you're going to have basically automated translation of what we call pairs, and it's up to you to choose what's your underlying value creation. Do you want to go back to fiat, or do you want to stay into crypto? But I think that as exchange become product-centric, you're going to have more of those pair trading that's going to appear. That's my prediction.
All right, that's about time for this session. Thank you very much once again. A big round of applause for Kun Stefan, Debates, founder and president of Elevated Returns. And next, ladies and gentlemen, we have a special video presentation that just came in from Mr. Tim Draper, founding partner of Draper Associates and DFJ. Let's see what Mr. Draper has to say.
Hi, I'm Tim Draper, and I'm sorry I'm not there at the Thailand Security Token Conference. I'm very excited about what you are all doing and the way you're thinking about tokens and securitization. This is really one of the most tremendous times in the history of our world. The world is becoming decentralized. It's open. It's going to be frictionless. We're all going to be a lot better off. And I'd like to make a special shout out to Tezos, because Tezos is creating a token that is going to be open and is going to, in effect, test the idea of a liquid democracy, and that could really change the way humanity operates. And this is just the beginning. The markets are extraordinary now for all Bitcoin and all the associated technologies that have come off of Bitcoin. The Tezos token in particular has been great in creating a technology that uses proof of stake. It allows users to make many more transactions than ever before. It's set up really beneficial for smart contracts, and I think it's just tremendous. So I love that Thailand, the Thai regulatory authorities are becoming more open and that they are encouraging more tokens and more STOs, and making it simple for token entrepreneurs to perform and to work in Thailand and around and outside of Thailand. Industries that have been affected by the internet are in the tens of billions of dollars. It's communications and information and gaming, a number of others. But the industries that are going to be affected by Bitcoin and all of these associated technologies, the blockchain, smart contracts, and combining that with all of the deep learning and big data that brings us artificial intelligence, are going to be going after industries that are in the multi-trillions of dollars, the ones that have not been as affected by the internet, but will really be affected by this new transformative time. And those are industries like finance and banking and commerce, all commerce, and real estate. I understand there's a real estate being tokenized in Tezos. That's exciting. In insurance, and then also in healthcare and government. They are the biggest industries in the world, and they are going to be affected here. And they're going to, I expect that I'm going to be able to tokenize all of my healthcare data and all my records, but not just that. All the data that I'm going to be able to provide to the cloud is going to give me a better diagnosis than any doctor has ever done before. And then in government, I think governments are now in a position where they're going to need to compete for their citizens, for their businesses, for the money and entrepreneurs of the world. This could end up being one of the most exciting and biggest transformations the world's ever seen, and it will not be an easy one. There will be a lot of very difficult, tumultuous times as we go, but it will be a very worthwhile one. I think the world is going to be so much better off, where all providers of all services need to compete for their customers. It's very exciting. I think that certain governments are being very heavy-handed right now because they fear this decentralization of the world, and other governments are being very open. And I understand Thailand is being very open, and the governments that are the most open moving forward are the ones that are going to be the huge beneficiaries of the next 40 years. This is a decision that governments are starting to make. I noticed that the Chinese government has pretty much shut down Bitcoin, but then the Japanese government said Bitcoin is a national currency. And so naturally, all the entrepreneurs from China would gravitate toward Japan. Binance was a company in China, and they decided to move out when Chinese government made Bitcoin illegal, and they moved to Singapore. And then when Singapore got heavy-handed, they moved to Malta. I believe that, and that was a $10 billion business, so Malta is thrilled to have a $10 billion business. I believe that these governments that recognize the value of Bitcoin, the blockchain, smart contracts, Tezos, all of the beautiful things that are happening in technology, and they build their regulations to attract them, will way outperform those governments that fear the future. So go get them, Thailand. I was just there. I'm sorry I missed you this time. And it's clear that Thailand is one of the most progressive countries in the world, and we're thrilled that we're going to be able to do some interesting things with Thailand. So go get them, and thank you to the Thailand Security Token Conference, and thank you to Tezos and Kathleen. This is great. Go get them. Sorry I'm not there. Have a great conference.
A big round of applause, please, for Mr. Tim Draper for sending that message to us here at the DS Summit 2019 Thailand. All right, ladies and gentlemen, as for security token offerings, or STO, is certainly seen as a valuable alternative investment for venture capital financing and private equity amongst international companies. And we expect to see enormous growth, as estimated by Elevated Returns President, Mr. Stefan, and also by a number of analysts to see this growth happening in the next few years. So what are the sectors to watch out from? Let's hear from our panelists. We have distinguished speakers to be joining us in this very first session. Our first speaker is Mr. Matthew Dibb, founder of Astronaut Capital, a licensed asset manager focused on providing an outperforming investment vehicle to retail, sophisticated, and institutional investors. And through extensive research, detailed due diligence, and a constant drive for alpha, Astronaut Capital has become one of the leading managers of cryptocurrency and digital asset investment. We're also very pleased to be joined by Mr. Jonathan Emsley, analyst from Chain Fund Capital. And our third speaker is Mr. Joel Koshoff, director of BlockReg, a business consulting firm specializing in end-to-end company model in blockchain technology, IPO, ICO, STO management, marketing, and regulatory compliance and business operations. We also have Mr. Ivan Soto-Wright, founder and managing partner of HODL, an asset management company and venture development studio that builds, stakes, and invests in the world's leading crypto and blockchain founders, exchanges, and protocols, as well as tokens. And our moderator for the session, ladies and gentlemen, is Mr. Henry Liu, director of ADAX. So if you're ready, please warmly welcome our speakers and our moderator. A big hand, please.
Good morning, everybody. This is our first panel of the day, I believe. Thank you guys for coming out so early. Thank you to Elevated Returns and Seamico for hosting this incredible conference today. So the topic we have today for this panel is how is the state of the crypto market and how big our STO is going to be. I think those are two very different questions. And so I'd like for us to be able to cover both of them. But on our panel today, myself as a moderator, my name is Henry Liu. I'm managing director of ADAX. We're a licensed token issuance platform and security token exchange. And I'd like each of these gentlemen to sort of spend a few minutes to introduce themselves and sort of how they're related to the space that we're talking about today.
Hey, everybody. Great to be here. Great to be in Thailand. I'm Ivan. I'm the founder and managing partner of HODL VC. HODL means hold on for dear life. This is definitely a volatile industry, and for us, we're really excited to shape it. We focus on three main things. One is building, so we build and incubate companies in the space. We partner with leading corporations and educate them on opportunities in digital assets, and we also invest, so we have our own investment book as well. Kind of my main focus right now is really around crypto adoption, digital asset adoption. I think security tokens, we're really at the beginning of this wave. I think there's a lot of opportunities to really examine the infrastructure and the building blocks that are going to enable us to see this market really grow. I think it's particularly interesting to be in Thailand because it seems like regulation here is very progressive in terms of enabling people to access digital assets, to access digital securities, and excited to explore the topic more today.
All right. My name is Joel Kopshoff. I live in Thailand, so Sawasdee Krap to everyone here. we focus, we're a Wyoming-based company called Blockrake. We focus on similar things to Ivan. We incubate. We go to companies that don't really have the business mind, and we get them the marketing. We introduce them to investors. We make sure that they're set up for success long term. I'm a former educator, so sorry about that. I'm a former educator, so basically I come in and help the companies understand the new space, the new landscape that STOs, ICOs have become, what they are, and just educate them so they understand how it's different from an IPO and if it's the right move for them, because maybe it's not. So that's basically a little bit about what I do. I'm going to let the other guys talk. And so,
hi, I'm Jonathan Emsley. I'm an analyst at Chain Fund Capital. So we are a venture capital fund based in San Francisco, but we also have offices in Dubai and Singapore. So we are really focused on accelerating the transition to what we describe as Finance 3.0. So that's the next generation of financial technology. We're seeing huge growth in finance. We believe that finance has a long way to catch up to a lot of other sectors that have seen huge transformations from digital technology. So we are investing in capital markets infrastructure, payment infrastructure, and we're doing everything that we can right now to see this transition.
Cool. Hey guys, my name is Matt Dibb. I'm the CEO of Astronaut Capital. We have a mandate to look to seed and invest in early stage companies in blockchain. So I think to date we've probably done over 60. Right now our focus is certainly looking at this STO arena and what's going to come out of it. I also come from a research background, as does my company, so I own another called Piccolo Research. And effectively for us, we like to pull open a company and be able to evaluate it based on that. And for STOs, that's what we're getting excited about, is that in contrast to ICOs, for example, there's a lot more information that we're going to be able to get to make better investment decisions. So, that's us.
All right, so I just want to get a feel of the audience that we have today. How many, by raise of hands, how many of you have invested or purchased a cryptocurrency before? Okay, about a quarter of the room. How many of you have bought stock in a publicly traded company before? More of you. Okay, so why don't we start with this question, guys? When you want to compare an STO to an IPO, for example, how would you sort of evaluate what you're investing in? And I know the STO space is very new, quite immature, but what are some of the strategies that you would use to evaluate these type of projects and investments?
So I think it's worth maybe just backing up on STOs and where they kind of came from within this kind of overall cryptocurrency ecosystem. So we obviously saw ICOs. There was a hype cycle, a lot of excitement, and these tokens that people were able to create, these new currencies that people were able to create. And for a lot of people, there are a lot of questions as to why people were creating these tokens. And I think the question was, is there a fundamental asset behind these tokens? Are these tokens maybe securities? And I think the vast majority of the people that raise money in ICOs were doing it for the purpose of fundraising. And because of that, I think regulators took notice and they said, well, I think this kind of smells and looks like a security, probably is a security. Obviously, there are exceptions to that. There are bona fide decentralized cryptocurrencies that aren't securities. But I think now that the regulation and kind of institutional investors have started to take notice of opportunities within digital assets, where we are now is really thinking about how can we create these new tokens that represent bona fide securities, and how can they be compliant with existing regulation. I think where we are now, it's very interesting looking country by country. There's different security token or securities laws, existing securities laws, and how do we apply that legislation to this new digital asset space. So I think right now, I think the opportunity is, it's interesting. I think a lot of people got excited about ICOs and they said, oh, great, there's this new wave of security token. Why don't I just raise money via security token? But I think it's really meant for more mature companies, new opportunities like real estate. It's a great example. And for me, when I look at security tokens, it's really offering a new vehicle that hopefully will have some sort of secondary trading liquidity. And where we are now is because we're so early, those mechanisms and markets don't really exist yet. That we're just seeing the very, very beginning of them. We're seeing big regulated security token exchanges come to fruition as kind of we speak now. And so, yeah, there's a lot of opportunity for this space to grow. I think it really, right now, we need people, we need leaders like Stefan at Elevated Returns thinking about how to apply this technology to real bona fide assets. So I think real estate's a really interesting opportunity. And so when I look at evaluating kind of security tokens, you can evaluate these with the same fundamental frameworks that you evaluate traditional securities today.
Yeah, I can agree with that. I would say that the STO market is very similar to the old IPO system. The difference is with STOs, you don't have right now, you don't have a secondary market really. It's going to be growing. The infrastructure is definitely growing around it. What we need to see now is people building things that actually people get excited about. Last year we saw people or 2 years ago, we saw people get excited about the opportunity to create something new, something different. Now we're looking at the same thing, but we need to actually build the infrastructure around it because we are in a regulated environment and we don't have everything really smoothed out yet. So I look at STOs kind of like a private equity play at this point, where you're going to be investing in it knowing it's the future, but not expecting a year from now to be able to cash in on your investment. So I really do believe that the STO markets are going to explode potentially, but not now. It's not going to happen like it did in 2013, where overnight, things are going to explode and move up, and everyone's going to be talking about it everywhere. We're going to see all these different companies, starting probably with real estate, maybe funds, and then we're going to see the smaller guys come in, the pizza shops like Pizza Hut potentially, having Pizza Hut have their own token. And that will give them the ability to do so because it will be cheaper. So middle-sized, mid to large-sized companies will be able to actually do this and be able to be traded. And that's something that I think we're waiting for and we're going to see. And we really need to build that infrastructure and potentially involve national stock exchanges in doing so.
Yeah, so I think that these are really interesting points. And to carry on in the same vein, I think it's important to look not at STOs not as some sort of crazy new movement. If we just look back at the last 10, 20 years, any technology that has disintermediated has been met with a lot of scrutiny. Say Airbnb or Uber. These things, people are not sure about them, and there's a lot of pushback initially. But at the end of the day, they lower costs, they're much, much faster, and they're much more convenient, and they're built for a digital economy. So I think that the same thing we've seen with ICOs, the technology was there. People could transact value in a peer-to-peer fashion, and it was not regulated. But the thing is that was this initial kind of uprising, similar to what we've seen with those other companies that I mentioned, 10 years ago, 15 years ago. And now all of those companies are considered legitimate. They've worked out the regulation and the infrastructure. There's still some things that are being worked out along the way, but it's very important to notice that, we can't expect this complete holistic industry to just, come out of nowhere, especially the finance is such an old infrastructure with, the U.S. Securities Act written in 1933. Like, you're not going to see these changes happen overnight. But as for analyzing STOs, yeah, I think that over time it will just be considered a very legitimate and efficient, cost-effective, fast means of raising capital. And yeah, I think that the same kind of traditional scrutiny and analysis will apply.
So in a previous life, I was more into IPOs, and I'm seeing a lot of similarities in terms of investment and attitudes towards investment with STOs, even though we're not quite there yet. And what Joel said was a really good point. Infrastructure is what we need to invest in now for STOs, because it is going, no matter what, it's going to be a big thing. You've got security tokens, and then you've got tokenized securities, and there is a difference. Tokenizing existing financial products making things that were illiquid liquid. Imagine being able to get a venture capital fund that's already been running for a few years and being able to break up that holding. Say, for example, there's 100 shares in that, and being able to actually tokenize that and have that traded amongst anybody. So bringing liquidity to the market, I think, is huge, and that's why for STOs it might take some time, but as long as the infrastructure is there, then it's going to happen.
So Matthew, this is for you, Jonathan, too. The both of you come from a research background, and for a lot of the people in the audience today, I know some of them come from an investment background as well, looking at what to invest in this space. How would you evaluate a project, not from the issuance side, but more so from, let's say, you're trying to invest in something, you feel like there's going to be liquidity in the market soon for products such as the ones that are coming out in Thailand, the ones that are already out in the US. How do you evaluate a project, and which ones do you get behind?
It's a hard one because there isn't that many projects out there right now. Property, for sure, is a big one. And yes, you can put a number and a valuation on a lot of the property STOs, which is great. There are some, for example, Lottery.com just raised $52 million. Not many people are talking about that, but you know what? That's bigger than any other ICO in the last 6 to 8 months. So can you value these? Yeah. You can do a discounted cash flow. You can do a whole wide range of different models to value these depending on what type of investment they are. But what are the sectors I'll be looking at right now would be effectively property, I think, is number one. It makes the most sense. And next to that would be businesses that have actual revenue, that simply just need a cash injection.
So I think it's still, we're still very early, so there's still a lot of infrastructure to be built. We at Chain Fund, we look at infrastructure and assets, but we haven't been investing very heavily in infrastructure because, there's not really, in many jurisdictions, there's not many incumbents, compared to even, say, the cryptocurrency industry, that's much more matured and, we've got many different sectors. We've got broker-dealers, custodians, exchanges. These are all really, really important components that we need. We're looking ahead and we're looking at the incumbent investment banks that we have now, Goldman Sachs, et cetera, and how many assets they have under management. And we believe that eventually pretty much everything's going to be digital. There'll be digital representations, or Fidelity with 2.3 trillion assets under management. They have a digital custodian that they've pretty much just launched in the last few weeks. They've been working on it for the last 6 months. These types of initiatives, it's not just going to be Fidelity. It's not just going to be these guys. All of these investment banks, we believe that there will be a transition. And there's still a lot of infrastructure to be built. So, we're investing in that, but we're also investing in, landmark asset deals because obviously the assets are going to come after the infrastructure. We invested in the St. Regis Aspen. We thought that was a really important statement to make about, how properties, $217 trillion market, how commercial real estate, how it can be made more liquid, fractionalized ownership. We're really looking at those two sectors, but we expect to see a lot more assets coming out.
So you guys have invested in all these projects, and when it comes to security tokens, we know there are only a handful, right, that are currently active. How do we bring liquidity into the market so that it becomes more active? And more importantly, what type of liquidity should we be attracting?
So I think there are a couple pieces to that. One, I think the on-ramps need to be easier for traditional investors to get onboarded. I think there's a lot of complexity. Just, how many people in this audience have actually registered on a security tokens exchange? No one. Yeah. Oh, maybe one. Okay. Well, I guess my point is, again, it's not necessarily simple and easy to access these new digital securities. So I think, again, a lot of it comes down to education, and I think also, these security token exchanges are very, very new. I mean, T0 literally just launched last month, a couple of weeks ago. And the trading that's on there, I think there was only like 100 accredited investors in their security tokens. So, I mean, we're talking incredibly limited liquidity that we're seeing today. I think another kind of important point is in this ICO space, we really opened up Pandora's box, where you enabled virtually anyone in this room could buy cryptocurrency. Whereas when we're moving to STOs, we're moving to a space where we need to follow regulation, we need to follow securities legislation, and as part of that, the only investors that can access it are really accredited investors. I have a lot of thoughts about this. Going back to the United States, our securities laws were written in 1933. I do think, for me personally, I don't understand. Well, this is just my personal view, but I wish more investors. We could open up to more retail investors. If we can gamble, why can't we buy securities? That's always been a question in my mind. I think one area that's interesting, having spent a lot of time in London and the UK, is if you looked at the kind of early market there around, I was always fascinated in looking at things like Kickstarter, these kind of crowdfunding platforms where people are crowdfunding these projects. And I said, well, why can't I buy equity, and particularly some of these projects? And London really led the way. There was a platform called Seedrs and Crowdcube, which you might have heard of. And what was interesting is they did qualify the investors as accredited, but investors could self-qualify by filling out a questionnaire that they were sophisticated. And so, the question is, will we see more regimes that enable investors to self-qualify and claim that they're sophisticated and be able to onboard those people? Because right now we're restricting ourselves to really the high net worth individuals and to security tokens. So yeah, I think for me it's looking at some of the legislation and trying to see how we can harmonize across many different jurisdictions. But I think in terms of on-ramps, there's obviously, we need greater awareness. We need really beautiful user experiences that can enable customers to interact with the security token exchanges and make it easy for them to register and onboard. But also, I think there's a legislation question. How do we make this easy across many different geographies?
Yeah, definitely can piggyback off of that. So I think really the biggest problem is that when people got into ICOs, the reason why the hype and why it moved up so fast and everything was just exploding was because it was easy to get on. Like anyone could just go, get on a Binance account, get on a Bittrex account, log in, put in some money on your credit card and buy it. So the thing is we need to figure out new regulations, I think, is the problem. And we need to make a global regulatory framework for security tokens because they are for the world. They're not just for US. They're not just for Thailand. So countries, I think, need to come together, sit down and figure out, hey, what do we really need? What do we need so that we can all work together, have the same rules, make it easy for regular people to invest, whether it be $100 or $1,000? Do they really need to be accredited? Is that the whole point of why we created cryptocurrencies, so that everyone could participate? So these are the questions that I have in my mind. And another thing is security. So we see every single week Quadrica and Mt. Gox and all these stuff. And there's no one really with the SAFU. We don't know if it actually would cover people if Binance, like for example, got hacked. So what do we do with the security side? Do we know if we're actually secure or not? Sure, there's T0 and they raised a lot of money, and sure they'll be backed, but they don't have any proof of concept. They haven't been around since like the National Stock Exchange of Thailand for years and years and years with a track record. So how are institutional investors going to feel safe? This is the stuff that I'm always asking myself and thinking, it's great that we can have this security token, but can everyone participate? Is it going to be safe? Are we going to have national and global actual regulations so that everyone can participate, at least at a smaller level, whether it be not being an accredited investor with $25,000 to invest? Maybe it's like $1,000 so that you can invest. But let's open up the books and let's let everyone have a chance to be able to invest, because they should be able to. Just like you said, if you can go to a casino in Macau and gamble $1,000, why can't you do that and invest in your future, your children's future, et cetera? So those are the three things that I'm constantly thinking about to answer that question.
Yeah, so I think that we're seeing a lot more awareness from retail investors, consumers about how the financial system works. There's still many things that don't make sense. Like, it doesn't make sense to me flying from New Zealand, where I'm from, to Bangkok, and I stop over in Kuala Lumpur, and I have to change my cash. I have to pay a fee to the intermediary. It just doesn't make sense. Like where we're at with digital technology, like I believe that if you can send an email instantly, you can communicate instantly, then there's no reason that you shouldn't be able to do that with financial technology. And we've seen that. Yeah, retail investors they're very powerful, and they're not to be underestimated, even though we have these large institutions and regulatory bodies like the SEC that are they're slow to move, and that's good. That's what they're there for, to keep us safe. That's great. But I think that because of the awareness that retail investors have now of what digital technology can enable, like fractional ownership, I think that if anyone can own a 0.1% of a Picasso, for example, I think that's fantastic, and I think that most retail investors would agree with that. And we're going to see more pressure being put on the institutions to accommodate this demand, I think. And in turn, they will influence the regulatory bodies. They will work together closely with them. So I think that the whole financial system is becoming much more democratized, actually. And the technology is the foundation of this. As soon as more people have awareness about what is possible, they're not going to accept these frameworks that we have, which have locked out, not 90% of the population from participating fully in the economy.
So the question was around liquidity, wasn't it? Yeah. So I think liquidity is probably going to be a bit of an issue, at least in the short term. Now, remember ICOs, when they first came out, as you said before, anyone could participate. 60, 100,000 people all of a sudden funding all this money, retail investors, could be $100, could be $5, anything. That brought with it liquidity, and it brought with it awareness. And that's why those projects did quite well. Now, the other thing is that now with STOs, which I consider a much more professional and above-board way of financing, you can actually value them. Now, could you value an ICO, really? How is it that someone could issue an ICO and be like, okay, my market cap's going to be 200 million, whatever? That's literally what would happen. It's like, they could come up with a number. And for STOs, that's going to be pretty much impossible because you can value them. So are we going to see liquidity and turnover like we saw in the ICO boom? No. Number one, the sample size of investors is going to be much smaller. They're going to have to be accredited. I think there's going to be issues with exchanges. So, for example, KYC, everyone will have to be KYC'd. And then it's not like you can have a token and then transfer it out of that exchange to somebody illegally if they're not KYC'd either. That's transferring a security to somebody else. So it's those sorts of things that I think the ecosystem's going to have to get around. I believe liquidity will come in some form, but it won't be, I think, what we've all been used to over the last couple of years.
So to shift that question over to the other side, from an investment perspective, we have people here who have existing businesses, who are revenue positive. How do they prepare themselves if they choose to use an STO as a way to fund and scale their business? How do they prepare it to attract proper investments? And what type of parameters should they have ready so that they can go to existing funds and say that they're ready to issue an STO for themselves?
Okay, I'll start on this one. I would say, firstly, if you've got a business that actually makes money, number one, that would be the first point to start, is to have a look at, well, number one, why are you raising the money? It's like doing any venture capital private equity deal. I mean, this isn't that different. But what you are hoping for is you are hoping for some secondary market liquidity at some point in time. That is really the benefit of this. It should be a cheaper and easier way to finance. That's what an STO is. So can any business actually do an STO, asset-backed, whether it's fractionalized ownership or whether it's just a company that's making revenue and you're promising dividends? Yeah, anyone can. It should just be, the whole point of it is for it to be an easier way of financing. That's it. So in answer to your question, I think anybody can effectively do it. But the question is, what is the benefit? Is it actually going to be cheaper for them to do that? And is there an incentive for the investor to contribute to an STO?
I think there is, because if you take a look at how much does it cost to maintain a company here in the public stock exchange in Thailand, it could be $250,000 a year. I'm guessing. I'm not from Thailand, but some of you can validate that here. How much does it cost to maintain a security on a security token exchange? Managing wallets, paying the issuer some fees. Perhaps a lot cheaper, right?
Ironically, it's a little bit more expensive in some cases now, just because the technology is so new and the providers in the space are still relatively limited. There are not that many players enabling to give you the infrastructure to launch your own security token. But yeah, I mean, I think in kind of the midterm, hopefully this is an alternative, in my view, to reverse merger activity. You know, a lot of companies buy shell companies or reverse merge into shell companies in order to get a public flotation and a listing and trade their shares. And I think hopefully security tokens can be a cheaper alternative to doing that. And I think that to me is you look at the reverse merger market and you look at that is a huge opportunity for security tokens.
Yeah, I would say security token offerings, the whole idea behind them and ICOs was cutting out all these middlemen, all these intermediaries taking a cut. By the end of it, you're barely making any money. And if you're a business out there right now and you're making a lot of profit and you're thinking, okay, in 5 years, this is the future, 10 years, this is the future, you should start thinking about it at the very least. Doesn't mean you have to do it right now. Like, you don't have to spend all the money right now, but you can start thinking about it and how you might do it, how you should structure it, and how the token economics might work for your company. That's not a bad idea. Hire a consultant potentially to teach you what you need to know, so when you're ready to actually do something like that, you're already got the mindset and you're not 3 steps behind. So I think it's more about planning for the future, your 5-year plan. It's about writing that in there. And if you think you have enough income and enough money coming into your company, enough revenue every single year, why wouldn't you think about this as a potential option? Because this is really the future. As much as people might think, oh, it's just a security token or it's a bleep coin or whatever you want to call it, the thing is, it's actually something that people are building around. You got BlackRock, you got Fidelity, you guys like Coinbase are going into STOs. It's going to be bigger than people realize, but it's not going to be right now. And if you're okay to think 5-10 years into the future, that's what you should be doing right now. Not thinking about, okay, right now I can make a bunch of money and raise a ton of funds if I don't really need it. I've told companies don't do STOs already before because it's not really right for them and they would swallow too much of their funds to actually do one. So you have to think really deeply, how is this going to benefit my company, and will it benefit my company to do it now? Or is it beneficial to think about it, and as it gets cheaper, and as the frameworks are there, and as the exchanges are actually opening up, then maybe there's a possibility for you to go, okay, now is the right time to hit the button, but I've already set myself up for that.
Yeah, to carry on that point, I mean, I think that I totally agree with what you're saying about it doesn't quite make sense for a lot of companies to be doing it right now, but it does make sense if you want to make an impact for your company and to be a leader and be seen as a leader in the space and someone who's forward thinking, because STOs, they're incredibly cost effective, they're incredibly fast, and again, we live in a digital economy, so legacy systems and everything on paper, calling up your broker and everything, I don't know, STOs are the future.
Very relevant in Thailand, right? You have one of the economies here with one of the fastest growing fintech sectors in the world, right? To be able to take a business, capture a wider audience, raise capital from people that actually have a connection with your business here, it's incredible. I think you don't just do an IPO or just do an STO, you can have both. Why not a hybrid model to raise capital from 2 different sector markets, right? I think it's a win-win situation.
I think an important point to make on the STOs is there needs to be demand for that security already. I think it's not just I think there's definitely a fallacy where some people think, oh, I'm a startup, let me approach this new form of financing. No, I think it really needs to be demand for that security already, and hopefully, and I think the other challenge is right now there isn't much liquidity, but I do think there's an opportunity to invest in thinking about where this market will be in a couple of years from now. And so there are some pioneers that are taking assets that previously never had liquidity. I think real estate is a really good example. and thinking about how they could structure security tokens around those assets. But those are trophy assets. The St. Regis Hotel is a trophy asset. It's an asset that people understand, that there might be some demand for already, and that's where it can make sense. But I think that is really the opportunity for security tokens.
So lastly, on this topic of liquidity, when do each of you think we will see that happen? I want to sort of get a time frame from all of you. And I want you to sort of pin it to a range of a number of months or years, depending on.
Are we putting money on this, or?
Yeah, it's recorded.
Let's do a bet. Okay, I'll kick it off. I think probably 12 to 18 months is where we're going to start seeing bigger liquidity, and it means exchanges actually working together to do that. I think that first mover advantage in terms of the exchange that can crack the secondary market for STOs, they're going to kill it. They're going to. So I think that there's going to be a number of them that launch. I think any subsequent ones that launch down the track probably aren't going to gain momentum, because really you want the most users on board. They all have to be KYC. They all have to be accredited. I think that's going to be the key. So for me, I'd say 12 to 18 months is where we're going to see it ramp up.
Yeah, I mean, by nature, blockchain, which is, the underpinning technology behind security tokens and cryptocurrencies, etc. Obviously, one of the massive advantages is instant transactions. So, actually, one of the companies that we are looking at is called OTCXN, and they're going to be one of these companies that really accelerate the progress of liquidity in the markets. They're basically a blockchain prime brokerage. They've got all the biggest many of the biggest prime brokerages signed, HSBC, FXCM, etc. And they basically are aggregating liquidity. And there's a lot of institutional interest. Fidelity's interested in them. And I think that's going to be a big driver as well, is the actual technological solution. And then, obviously, there's just all the onboarding and so forth. But, yeah, I expect that by the end of the year, we're going to see some big advances in liquidity.
Okay. I might have a longer-term look, but I think that it's going to still take time, because we do still need regulations. We still, as institutions, need to know what can I do, what can't I do. Sure, they can follow the old security laws, but they still need frameworks of, if I invest, how is this going to work? So liquidity will definitely come. I think it's a little bit longer term, maybe like 3 years or so, maybe even 5. But that doesn't mean that it's not going to grow. I'm just thinking that when we're going to see it, really get to that point where everyone's doing a security token offering, it's going to be probably 5 years or so. Doesn't mean that we're not going to see tons of them come out. It just, the liquidity will come when we have the rules and the regulations all kind of set in stone. Now, what you were saying, Matt, was exchanges working together. Actually, BlockRake works with a company called BlockStation. And their whole plan is they've created a whole entire regulatory system with KYC and AML and Chain Watch that they created. So basically that you can be a national stock exchange, plug into their system, and you are fully compliant, and you can trade security token offerings, you can trade cryptocurrencies, and while all those national stock exchanges link up to them, you'll be able to have a global order book. So instead of seeing wash trades and spoof trades like we're seeing on all these other exchanges, you'll see real-time trades on all of them at the exact same time. And that will definitely help with liquidity, because you'll see people from all over the world who's investing in what. And so something like that, I think, could be the future. They've already proven the concept on the Jamaican Stock Exchange, and I think that the more stock exchanges that do this and link into their system without having to pay for it, they do it for free so that they can actually build the space and just share some fees with the exchanges. That's something that could definitely push liquidity and legitimacy forward.
Yeah, no, I think I'll echo. I think it's 3 to 5 years. I don't think it's necessarily this year that we're going to see just a massive uptake of security tokens. I think it's coming. It just takes some time. I think really custody is one of the biggest issues that gets talked about a lot. Just learning how to set up a wallet if you're a corporate, and learning how to essentially manage all of the various pieces around security tokens, there's still a lot of education. And I think it's good that very large institutions are entering the space. You have some of the biggest banks that have expressed interest in doing custody, Nomura, you have Fidelity, you have all of the big players coming into the market saying they're going to be doing State Street, big institutions saying that they're going to be doing custody, which I think will help. But I think it just takes time. So yeah, 3 to 5 years is my number.
Just one thing on that. I think we keep talking about liquidity is in secondary market, right? Like, so you've got your token, how do I get out of it? I think there's a very big use case for security tokens that don't need to be listed. And what I'm talking about specifically is dividends. Now, it is so inefficient in the stock market sending out dividends to existing shareholders, right? Having that on the blockchain via a security token, just having a wallet address or owning that token, all you have to do is hold that token somewhere, and they can send you a dividend like instantly. For like no cost, could be like take them 5 seconds to send out 50,000 of them. So there actually is a really good purpose for security tokens that aren't listed either, and dividend payments is a big one.
So 12 to 18 months, 3 to 5 years, 3 to 5 years, 12 to 18 months, 12 to 18 months. Okay. And that's a good point, Matthew. I think if we are able to see more quality companies paying out real dividends and being able to issue them using this technology, the adoption is just going to grow a lot faster. So to wrap up, we want to save a few minutes for some questions from an audience. Does anybody have any questions for our panelists up here today? In the back of the room there.
I am from STO Filter. We are a business with an STO investment market platform and MVP stage. We intend to serve global retail audience. In your opinion, will accreditation laws be relaxed, and which countries do you see adopting an easier stance on that first?
Yeah, it's hard for me to predict how regulators are going to take to relaxing accredited investor rules. But as I said previously, I think there are certain jurisdictions where you have that self-certification as a sophisticated investor. And I think in those regions, I think there will be a smoother path than other jurisdictions like the United States. It just takes time for regulators to change their opinion on something that's been around for almost 100 years in some cases. So I think, I think it's hard for me to comment on how quick it will be, but I do think it goes back to hopefully having a harmonized global framework for looking at security tokens. And I think by working with progressive regulatory regimes, they will really set the path for other regulators to take notice. So, hard work in a jurisdiction like Thailand hopefully gets noticed and reciprocated in other geographies.
Is this working? Hello, there we go. I think Asia in particular has been quite, how do I say it? Most countries have a very different view on security tokens from what I understand. China, for example, they've said they're illegal. Malaysia, the same. How progressive is everyone? I know that there's a lot happening in Thailand, of course. I think the Philippines as well. There are parts of the Philippines where they are looking to regulate it. So what areas are probably going to do it first? I'd say outside of that, Binance obviously being in Malta, I think that those countries and around there have much more relaxed jurisdictions. So I don't think that there's no easy answer to it, is there? There's really not. I think we're taking sort of a shot in the dark for it, but you can tell the governments that are more progressive towards it. Singapore also being one as well.
Yeah, so I work with SEZA in the Philippines, and what we do to help them sort of bounce ideas back and forth on the accreditation side. It also not just comes from the consumers, but also comes from issuance platforms. Right? They're doing a move with Abaca right now to actually create an accreditation service where they accredit the issuer themselves and to just add another extra layer of protection for the investors. And I think that's a great move forward, too. There should be accreditation for people investing, but there should also be proper accreditation in regions like Thailand, in regions like Philippines, in regions like Malta, where they are accrediting the service providers themselves. This just makes the ecosystem, I think, a lot more efficient for everybody.
Another point I'll just add is on KYC. I think technology has really improved the ability to verify investors using identity documents and basic information around investors. You're starting to see some standards and reciprocation across different KYC platforms. I think you're going to see that more and more. So I think that's good for onboarding from an investor. You don't want to have to go through KYC for every single exchange that you might be trading security tokens on. So hopefully that helps things in some ways from an investor perspective.
Yeah, and the one other thing I like to put out there is Prin, who works in Thailand at the SCT, he asked a group of that I run in Thailand about crypto and blockchain. He asked us, hey guys, like, what do you guys think that we need? This is something that's really progressive. This is something that governments need to do as well, is talk to the people that are involved in the industry, talk to the people that are in the public, find out what they actually need, so that you guys can work together as a government and all the way down to the grassroots level so that you can actually help people figure out, is this something that they want to do? And the government might say no, and the people might say no, or they both might find some commonality. So I think it's really about collaboration and having people figure out, how is this going to work together, not just have some guy at the top from the traditional model of, this is how we do stuff, and if you don't like it, too bad. More of the let's open up the floodgates and say, hey, what do you guys think? And even if it's not the right answer, it doesn't matter. Get people involved. And Thailand has definitely been in the forefront of doing that. And that's something that I really respect about this country and why I love it living here, because they actually listen to the people. And that's something that needs to happen more often.
So just to conclude, question, yes.
In terms of the secondary exchange, liquidity on the secondary exchange, is the current blockchain technology able to manage the high frequency or low latency trading or not?
Centralized, yes. Decentralized, no. So in other words, if there's a server that's running it, and it's hosted somewhere and it's centralized, then yeah, it can take high frequency trading. That's what Binance does, etc. But then your decentralized exchanges are substantially slower because there's got to be a blockchain transaction for everything to go through. Transactions per second are way lower than centralized. So. Is it going to happen for centralized exchanges in terms of STOs? Yeah, definitely. There's no problems with scaling that with high-frequency trading, etc.
And I think just to add, we are seeing massive advances in decentralized exchanges. Binance actually they released their testnet for their decentralized exchange. It's got 11 nodes, so it's not that decentralized. But we're seeing massive progress. So I think that very soon we will be able to experience near instant or instant transactions on decentralized exchanges for security tokens.
Ideally, it should be decentralized, right?
Yeah. Ideally, it should be. That's the purest view. Yeah, it's more secure, much more secure.
How would it work in Thailand for a centralized system? Would that be the best model?
I think for now, all centralized is the way to go if we're talking about security token offerings, just because they're securities. They need to be governed by somebody. And until there's a framework that is decentralized for security tokens, you're never going to see them on DEXs, not anytime soon. They need to be centralized at this point, in my opinion. And I think that when we have those frameworks built, absolutely we could put them on a decentralized system. But you can't take something that's a security and let a guy like myself, who's not a broker-dealer, trade it with anyone else. It's illegal, like in any country, pretty much. So that's something that we have to build a framework for, and it's something that, again, it's a 5-year plan for sure.
I'd also just say the blockchains continuously are improving and are able to handle higher and higher throughput. Ironically, some of the ones that are really fast aren't as decentralized. They're like delegated proof of stake, which enables it to run much much because it's actually, in theory, not as decentralized. So it's running it through more kind of centralized. It almost acts like a republic in some ways. So I think the technology will continue to improve, but I think, like we saw with cryptocurrencies, it will start with centralized, just because it will be faster to be able to, and also the trust around that, especially with securities. I do think it will start centralized, and eventually, and hopefully over that time period, when we start to see more and more adoption of security tokens, the decentralized blockchains will start to really improve.
So we are out of time. Thank you guys all for attending today. It was a fascinating and broad sort of topic to cover. Thank you for Elevator Turns and Stefan for hosting. Actually, earlier that video was quite funny, the one that he had a guy dancing and everybody followed. And to that point, I just thought that for everybody here that's an innovator, for all the regulators here in the room, I think this is something that we all sort of share in common. Just to keep in mind that it's okay to push forward with these, and we're all looking forward to it, all of us, right? STO regulations. Bluetooth. How many of you guys have Bluetooth on your phone? Everybody, right? Bluetooth, just keep in mind, it was not the first wireless transmitting service or technology that was available. It just happened to be the one that everybody pushed forward to use. And I think when it comes to security token issuance and technologies, we could be doing the same thing. So thank you, everybody, for listening, and that's all. Enjoy the rest of the day.
Thank you.
Big round of applause, please, for our speakers, and of course our moderator as well. So many thanks once again to Matthew Dibb, founder of Astronaut Capital, Jonathan Emsley, analyst from Chain Fund Capital, Joel Kovshoff, director of Blockchain, Ivan Soto-Wright, founder and managing partner of HODL, and also Henry Liu, director of ADAX, our moderator. Distinguished guests, ladies and gentlemen, blockchain technology is one of the most promising technologies that do support crypto assets. It presents opportunities in seeing a transformation in the financial services industry. In our next keynote presentation, we'll take a look at the type of crypto assets and also smart contract, which is known for being able to simplify processes and also eliminate intermediaries. So why is it becoming important, and how will it impact industries? Let's find out together by warmly welcoming our speaker, Mr. Jonathan Bellish, Director of Tech Enablement, Blockchain Lead, KPMG Israel. A big round of applause, please. Thank you.
Thank you. I think you can take up that picture now. You can see it was 10 years ago. Well, 20 years ago, it was the last time I've been to Thailand. And I remember I go to the night market, and I almost left without any money. And when I took a taxi, or maybe it was a tuk-tuk, I don't remember. So I offered the taxi driver, instead of paying money, maybe I give him a pack of cigarettes. It was a Winston Red, I remember. And he agreed, and he took me to the hotel, and I gave him the cigarette. It was a simple transaction. 20 years later, it was 2 days ago when I came again to Bangkok, there was a problem because I quit smoking. I didn't have any cigarettes. But fortunately, there is an app called Grab. So Grab make this simple transaction of moving from one point to another very simple. But Grab also uses a lot of intermediators. I use Visa, that pays to PayPal, that use some custodians to pay Grab, that finally pays to the taxi drivers. And this seems to be a bit complex transaction that I managed to do 20 years ago with only a pack of cigarettes. So how this is an advantage after 20 years? If you want to manifest trust, and you use this excellent technology, but still the transaction uses a lot of mediators. The reason is that to manifest trust, we have a basic thing that we rely on our legal system. The legal system is the cornerstone of the foundation of society, because we don't really need contracts. We only need contracts if something is going wrong, right? If the deal is going fine, we won't even remember what the contract said. This is only for disputes. When something is going wrong, we're getting emotional. We are disappointed. We are angry. We are seeking for compensation. And sometimes even more than that. That's why we need a legal system. So Nick Szabo, in 1995, thought that there might be a way to simplify this process of contracts. He called it a digital contract or a smart contract. That was the cornerstone
to the coming technology of Bitcoins 10 years later. But let's look back at the history. 3,000 years ago, if you read the Bible, Moses came with 2 tablets with only 10 amendments. 300 years ago, the American Constitution was written on 10 pages. And then you have the Obamacare, 15,000 pages. The American IRS, 17,000 pages. Federal law, very complex, very hard to master. So Joseph Tinzer, in his book, The Collapse of Complex Society, basically described how we are buried in bureaucracy, how people exploit the system. The society built projects that are very simple, and they build around this project organization that have to govern these projects. But as long as the organization becomes bigger, the complexity is rising, and the revenue of projects is diminishing, is going down. So we end up with a complex system that people are exploiting. And this is something we want to try to overcome. But complexity is not the only reason to the rise of blockchain technology. In 2008, there was a fallout of major banks all over the world. It was the beginning. And people ceased to trust the financial institutions all around the world. It was a graduate process. But on the other hand, started the rise of technology companies. People started to trust Facebook and Google and put all their lives inside these platforms. So this is where Bitcoin started. It started as an experiment of a system without a single control, a successful experiment, which people keep the trust on each other to transfer value between each other, instead of using intermediator, instead of the frustration of the financial sector. So Bitcoin was a simple smart contract when you transfer value from one wallet to another, a simple transaction, store of value. This is a vending machine, and if you look at the internet, it would be one of the analogies of smart contract. You trust this machine. You put money in the machine and you get a soda. Why is that? Because there is a code embedded in this machine that says you should get a soda. You don't always get a soda. Sometimes the machine breaks up, but you trust it, right? So smart contracts that started somewhat about 2014 enabled to build something more complex with the blockchain, to embed rules into program languages, like Nick Szabo predicted. Let's take an example. I can give you $100, but you can use it only on your birthday. This is a conditional store of value. I condition the value in some rule that I embedded into the smart contract. You can give money to your kids only to buy healthy food, right? No, that will never happen. Yeah. Anyway, so smart contracts are transparent, safe, secure. They cannot lie to you. They cannot manipulate you. It's basically you, the contract, and a block of change. Sounds very simple. But it's not that simple. It's not about programming. It's not that technical. You also have to understand what's lying inside the contract. And what lies inside the contract is the relationship between us. And this is still described in the laws of our countries. So you have to understand the legislation. the policies that you need to embed in that contract. And that still might be a pretty complex mission to achieve. So smart contracts are not yet mature because of these problems. It is very hard to describe in code every kind of contract, every kind of commercial transaction. It is not that simple. Smart contracts have some mathematical problem, legal problem, tax. If we use smart contract in a way to communicate between different entities, what kind of legal system will I use? Will it be United States, Thailand, European? We have to think about it. And these problems are not solved yet. What happens if there's an error in the smart contract? If there's a bug? It's a piece of code. What kind of code will handle this error? Should judges now learn how to read Solidity code? I don't think so. So we should take simple problems and start to tackle them with smart contracts, because we cannot do complex problems with smart contracts, not yet. When we look at the capital market, there's a tendency of people to invest more in debt rather than stock exchange. There's a low risk revenue compared to shares. That's why people are more drawn to the debt economy. And you can look into the numbers. I'm not an economy specialist. I'm a solution architect. But this is where this technology starts to raise in the form of security token. Well, it started as an ICO, but we cannot say ICO anymore, so security token offering. Security token offering is a funding instrument, is a financial instrument to raise money. The challenge is how we embed all the regulation about the project. Every project has its economy. In STO world, we call it a token economy. We have these rules that we have to validate. Legal rules, tax. This is where companies like KPMG come and help the investor to look inside the code and say if it's valid. Because as investor, you cannot just look in a list of STOs and pick the project that you want to invest in. We cannot simplify things. That's why we validate contracts. KPMG searched the market of blockchain for a long time. We take it very seriously. We don't look at this as a hype. This is another financial area that we need to look carefully and protect our investors, our clients. I will not go deep into these numbers, but just to give you, and this is a survey done about 740 global companies around the world to better understand the trends, what they think. And this is done in January 2019, last January. So the trends, what this leader in these companies think, that one, they will probably implement blockchain technology. That blockchain technology can leverage their business, will change their business model. They also think that it is risky and complex. So we need to better understand how to manage this technology, how to adopt it carefully. This is not a straightforward technology. This is not a straightforward investment. This is early stage, very early stage technology and a business model that it will take several years to mature. So what is the future? Well, my perspective is that many people in this room don't invest in crypto assets. Does someone here does invest? Any hands? No one. Oh, 1, 2. Okay. So this is room full of people that came to a crypto asset event, but no one is really buying any crypto asset. This is normal. But it's similar to people that are saying that skydiving will be the next mainstream sport, but they will never do it because it's very risky, right? But this is only us. The millennials think differently. Millennials live in the network. They born into the internet era. They have their tablets, smartphones, experience, photos. All their emotions are embedded and invested into these networks transparently. They don't care about the system. They want to be celebrities. They want to be famous. They use these platforms. So those are the next generation investors. This is the audience we should all target. So some of you might be skeptic about blockchain and smart contracts. But they are not. They are not skeptic. Millennials are trying new stuff all the time. They are geek savvy. They will try it only because it's new. They will invest in blockchain. They will experiment smart contracts. They will do STOs. They even build financial instruments we cannot even imagine for now. So, basically, this is the end of my presentation. And I did this pause just to let you think a little bit about what I said. I think this picture demonstrates how these people live. You see a space full of people, but what they are doing, they are looking into their tablets because their world is inside this tablet, not what's going on around them. This is the real change. And we should take it to consideration. Thank you very much.
Thank you very much, Mr. Jonathan Bellish, Director of Tech Enablement Blockchain Lead from Israel. Are there any questions for Mr. Bellish? Any questions about smart contracts or crypto assets to be asked? Well then, I believe everything has been clear, so thank you very much once again. Ladies and gentlemen, that's it for this morning's session. We'll now take a break, a lunch break that is, and lunch will be served at Plunget Rooms 1 to 4, which of course are located at this level, and the next session will resume at 12:45. 12:45 that is, more areas to be explored, so for now do enjoy lunch and hope to see you on time. Thank you very much. สำหรับนักข่าวที่ไปงานแถลงข่าวนะคะเรียนเชิญได้เลยนะคะที่ห้องข้างๆนะคะแล้วก็ในภาคบ่ายจะเริ่มขึ้นในเวลา 12:45 น.ค่ะขอบคุณค่ะ